After many years in the buy-to-let market, BM Solutions has finally upped its game and entered the limited company arena. Skipton's 100% mortgage now goes up to 5 times income, and inflation, well, it just won't quit. Is the mortgage market steadying, or is it about to get messy again? In this week's episode, we've got major lenders increasing and cutting interest rates at the same time, two big names entering the limited company buy-to-let market, a sharp rise in food inflation that's hitting households hard, and a base rate decision looming next week with a potential rate cut on the cards. And wait till you hear just how much the UK borrowed last month. Honestly, it's jaw-dropping. Welcome everybody to this week's edition of the UK Mortgage Market Insights for the week ending the 1st of August 2025. I hope you're all well. Let's kick things off this week with the rate changes, and there's been plenty of them. First up, Halifax shaved 0.1% off rates for home movers and first-time buyers, and they trimmed rates on some of their remortgage deals too. Nationwide made cuts of up to 0.21% across selected fixed-rate products from its range, and their sister company TMW, who are in the buy-to-let space, they're reducing some fixed rates by as much as 0.25%. Coventry cut fixed rates across the board on all their products, and the Leeds Building Society, NatWest, and Principality also made selected reductions, mostly small, but still helpful. On the flip side, however, we had Santander, Barclays, and Virgin nudging up certain rate, with Virgin's 95% loan-to-value products in particular seeing a jump. Moving on to criteria changes, this week we saw BM Solutions announce that they are finally entering the limited company buy-to-let market. They were pioneers in buy-to-let back in the day, so this move into the limited company arena really does seem overdue, but it looks interesting and it offers more opportunities for landlords. NatWest has also announced that they're entering the limited company buy-to-let space. Sort of. They're partnering with LandBay for now and funding some deals. So whilst it's not going to be under the NatWest name, it does show intent, and maybe this could be the beginning of a bigger rollout further down the line. And then there's Skipton. Their 100% mortgage for renters just got a boost, and it now offers up to 5 times your income multiples. This product is aimed at those who haven't owned a property in the last 3 years and haven't been able to save for a deposit because, well, they've been paying rent. It's a bold move, but I question whether or not it's safe. If you need to borrow at 100% because you haven't got a deposit, should you really be stretching your income as well? Personally, I think not. I think this is a risky move. But from the lender's perspective, I'm sure that they've done all of their due diligence and they've had approval from all the regulatory bodies that need to give it, and they've been given the go-ahead. But I just question, if you haven't been able to manage to save for a deposit, meaning that you're already finding your income stretched to the limits anyway, should you really then be stretching your income multiples up to 5 times? I'm not so sure. Now, let's talk about the bigger picture, and I've got to say, it's a little bit murky. The British Retail Consortium reports that food price inflation has risen for the 6th consecutive month, with meat and tea seeing the sharpest rises. Now, these are essentials, they're not luxuries. So if families are to continue making cutbacks in order to make ends meet, where exactly are they going to make them? Families are struggling, like really struggling, and yet the government seems to turn a blind eye. They really haven't got a clue what they're doing, or even worse, what they're going to do. And here's another prime example. Last month, the government borrowed over £20 billion, and 16 billion of that was just to cover the interest on existing debt. Just think about that. The UK government are borrowing money just to pay interest on what they've already borrowed. If that was a business, the management board would have been replaced ages ago. I'd love to hear your thoughts on this and what you think should be done about it. Now, the Bank of England meets next Thursday, and, fingers crossed, we're expecting to see 0.25% base rate cut, taking the base rate to 4%. There may well be another cut later in the year, but of course, nothing's guaranteed. Inflation is still sticky, jobs data is weak, and businesses really are struggling under costs, many which have been driven by government policy. So if the decision makers continue along the same path, things are just likely to get worse. So I think it's time to stand up, cut the base rate, and give growth a chance, because current policy and current rates are absolutely stifling it. I'd like to know what you think that the Bank of England might do next week. Will we see a cut? Will rates remain the same? Or even worse, will they increase them? Now, we've literally just had some news land this morning. The nationwide house price index has been released. They're reporting an annual house price growth of 2.4% in July. That's up from 2.1% in June. House price is up 0.6% month on month, whilst the UK house price to earnings ratio was at its lowest level in over a decade at roughly 5.75 times. I will try to find a link to this report and I'll attach it in the video description so you can go and take a look at it for yourselves. But what does all of this news mean? Well, here's my take on it. I think it looks like lenders are clearly preparing for a slightly lower rate environment, but they're being cautious about it. Rate cuts are happening, but they're very subtle. At the same time, criteria is loosening and lender options are improving, especially in the landlord space, which tells you that that's where the market is moving. Inflation and weak economic performance are still major headwinds, and it feels like the market's on edge, waiting to see what the Bank of England does next week. For those of you that need to or are getting a mortgage right now, if you see a rate that fits your budget and you need certainty, grab it. If you're flexible, waiting might save you a little bit of money, but don't hang your hopes on it. We have seen lenders increasing rates, so you might just want to take what's on offer while you can. So to sum up, lender rates are moving, but the direction overall is still leaning in the positive direction, meaning that they're coming down slightly. The limited company buy-to-let space is growing, but the economy, well, that's a wild card. The Bank of England's move next week could change everything. Please do tell me in the comments, are you securing mortgage rates now, or are you deciding to wait for a little while? What do you think of the state of the country's finances and government policy? And what would you do if you were on the Bank of England's rate setting committee? As always, if you found this useful, please do give it a like, hit subscribe, and I'll then see you in next week's update. There's a lot changing every single week, and I'm here to help make sense of it all. Take care.